portion of Fox 43 AM Live is sponsored by Endeavor Private Wealth.
And Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our latest segment on investing. Chris, good morning.
Good morning.
So Chris, we know stock prices fluctuate throughout the trading day, but are there times during the trading day that potentially are more favorable to trade than others?
Dane, it's good to be back with you and our viewers. You raise an interesting but nuanced question. Let's start by considering what constitutes the trading day. For the New York Stock Exchange and the NASDAQ, the main stock trading sessions begin with the opening bell at 8 a.m. Central Time and end with the closing bell at 3 p.m. Overnight news and morning headlines may be an impetus for heightened interest in specific stocks, sectors, or the market in general at the start of the session. By midday, though, prices, movement, and trading volume generally tend to kind of slow down. And then as the market close approaches, activity may pick up as the buyers try to get on maybe a rallying position or sells to lock in some gains or minimize losses.
Are there any other times that investors can buy or sell stocks?
There are. Extended trading may take place in pre-market hours, generally beginning at 7 a.m. Central Time through what can be as early as 3 a.m. And then aftermarket hours start with the closing bell and continue until 7 p.m. During these periods, they are not conducted on an exchange, but rather facilitated through an electronic communications network which handles trades digitally.
And with all the advances in technology, why aren't investors able to trade all day without limitation?
Well, the New York Stock Exchange has submitted plans to the Securities and Exchange Commission, or the SEC, to extend its digital exchange and trade for 22 hours a day. And there are other firms who already offer overnight 24-hour trading platforms.
And what are the potential benefits and, I guess, risks to investors in trading during extended hours?
Yes, proponents of the extended trading say it makes trading more convenient for individual investors who want to trade on the most recent news and developments, and giving them more control over their portfolios and allowing them to manage the risk in real time. On the other hand, the SEC and other industry observers note that liquidity and volume may be lower during extended hours, increasing the difficulty of executing trades at favorable prices, and less trading volume could increase price volatility. And many extended trading participants may be large institutional investors or sophisticated traders who have more access to resources, giving them a possible advantage over the typical retail investor.
And Chris, any final thoughts for our viewers on the subject?
We've all heard the expression, timing is everything. But when it comes to investing, I believe that long-term success isn't so much a result of timing the market, but rather it's a result of the time an investor stays invested in the market. Doing so pursuant to a thoughtful and prudent plan that balances the investor's time horizon, risk tolerance, and financial goals as a way of staying, as opposed to staying up to the wee hours of the morning, and that helping to make that big investment score. And so at the end, I'm reminded of a sage reflection of one of the greatest investors of all time, Warren Buffett, who says, "We continue to make more money snoring than..."
Always, thank you for your insights. Your timing is impeccable. And to learn more about Endeavor Private Wealth, visit EndeavorPW.com.
The preceding portion of Fox 43 AM Live was sponsored by Endeavor Private Wealth.